In today's session, we're going to be talking about the future of HMOs, which is a huge topic, especially with what's going on in the economy right now. I kind of tend to stick with the topic of HMOs because that is probably one of my specialities, what a lot of people know me for. And believe it or not, it's a topic that I speak about pretty much every day. Someone either calls me and says, Arsh, I've got this issue, or I don't know what to do with this. And I thought it'd be quite apt right now to talk about the future of HMOs. Is there a future for HMOs? And the reason why this topic has come about is because I was actually out just walking and someone said, are you Arsh from the podcast, The Property Rebel? I said, yes, I am. And they started talking about one of their HMOs that they had in Wolverhampton, and they're losing money hand over fist right now. And the reason why I say that, they said that they had a 4-bed HMO, which is already limited with the income that it's going to produce because it's only got 4 rooms. Now, if you take out the consideration that you've got to pay your mortgage, you've got to pay your council tax, water, electricity, gas, broadband, cleaner services, whatever it may be, you're going to be left with a limited amount of cash flow. Now, one of the questions that I was asked is, what's the future, especially with all the energy bill rises and the interesting times that we're going to be facing? Where does it leave everyone? And what should we be doing to kind of protect ourselves? Now, I've spoke about this quite a lot. We do have to buckle our belts. And I don't say this lightly because it's going to be a testing couple of years. Now, as we record this today, we've been blessed with a new Prime Minister. And it could be interesting times. One of the most interesting things, or should I say, the next 30 days will be quite interesting for us as a public to see how she tackles this issue of rising energy bills, because there are so many businesses that are being discovered that are going to go under, that are going to literally force their hand to declare themselves bankrupt or close their doors. We're talking about care homes, we're talking about retirement homes, we're talking about other businesses that just can't afford the rates. I was speaking to a company that owns a bakery. They reckon that their electricity bill right now is around 12.5 grand, and it's going to go up to approximately 50 grand. And now that's a huge increase. Now, when it comes to bakery and food, they can't necessarily put their cost of their services up to such an amount to cover such an overhead. So what's going to happen? There has to be give somewhere. Now, we're quite fortunate because in property, we can put things in place which kind of restricts what we can do, or even limit our losses, shall we say, or limit the damageation. Damageation, is that even a word? Either way, we're going to run with it. Well, let's limit the damage. So when it comes to electricity and gas, now I know that there are going to be lots of you out there that would have already fixed your rates, and that's fantastic if you have. So when we talk about fixing rates, you would have called up your supplier, whether it be British Gas, E.ON, Scottish Power and other energy providers out there, and say, guys, I want to fix my rate for the next 2, 3, 5 years. Pretty much similar to like what you would do with a mortgage company. You call them and you try and fix your interest rate for a certain period of time. And if you have done that, that's a wise move. And the reason why I say that is because if they're trying to fluctuate your rate, they can't do so without breaking your contract. And there are also all kinds of implications for that. Now, I'm not going to get into the realm of all the things that people like Martin Lewis have said on their channels, because admittedly, I don't know the legalities behind that. There are lots of people said that you don't have to pay, you shouldn't have to pay. I'm not suggesting otherwise. I'm not suggesting that you can or you can't, because I don't know the reasons behind or the legality behind it. What I will suggest is certain ways that you can kind of put measures in place now so it will restrict and also help you. So first one, meter your properties. When we talk about meter your properties, this I think is going to be one of the best way forwards for landlords. And the reason why I say that, when we talk about metering properties, we're talking about now metering each room. So if you've got a HMO, you can meter the rooms, so you can put a little electricity meter. They're also referred to as feeder meters. Now, I'm going to mention a company here, and I've used them previously. I'm still using them in one of my HMOs, and they work really well. They're called Metro Prepaid. Now, you can check them out on their website, and what they do, they actually sell mini meters that you can install retrospectively into your HMO. Now, what they do is ultimately the tenant would now be paying for the electricity for their room and their appliances within their room. Now, the best way that I can refer to these is the modern method of the old 50p meters. Do you remember them, where you had to put 50 pence in, and then when the electricity cut out, you had to put another 50 pence in? Pretty much like a mini electricity vending machine. Now, with Metro Prepaid, they've brought it into the 21st century, and you can actually purchase, instead of putting the 50 pence into the actual meter, and which was also like a mini piggy bank for tenants where they could kind of raid if they got short. Now it's all done electronically, whether you can pay by bank transfer, whether you can go to a shop that accepts like Payzone or PayPoint, and also PayPal. So you can pay for your electricity online, and what happens is that Metro Prepaid, every month they send you a statement to say, here's how much your tenants have paid. And then what they do is that they take a percentage for their service, they send you the rest back, and then you use that income that you've generated from room 1, 2, 3, 4, 5, 6, however many rooms that you got, and then you pay your electricity bill. So they are called feeder meters because they feed the meter, allowing you to pay your bill when they come along, or when the bill comes along. Now the trick here is to make sure that the units that you're paying, the price per unit you're paying, matches the price per unit on the tenant's electricity meter. The reason why I say that is because if you're paying, let's say, 5 pence per unit, but you're only charging the tenants 3 pence per unit, you're still out of pocket. So if you're paying 5 pence, the tenant should be paying 5 pence. Now, I should say here that it is illegal to profit off this. So you can't be collecting, you can't be being charged 5 pence and charging the tenants 7 pence. It's illegal to do that, but you can charge them exactly the same as what you're being charged, and it's justifiable. Now, I think this is a big way forward. The reason why I say that, I'm going to give you the pros and cons. One of the pros is that obviously it reduces the liability of such a large electricity bill away from you. One of the cons is that you're now offering a room exclusive of the electricity. So before, your rent would have been inclusive of all bills. Now it excludes electricity, and the tenants now have to be responsible for their own outgoings. However, on a positive note, you will find that the tenants are now more conscious of what they're spending, and you will find that previously in your HMO, you probably walked on, all the lights are on, TV's on, they've got a little blow heater running in the background when the central heating's not kicked in. All that will stop, and I promise you that you'll find not even the TV on standby, because they're now paying for it. Now, some of you are going to be listening to this and saying, well, Arsh, okay, I'm not paying for it, but then the tenant is paying for it. But yes, but you will have to factor that into your costing. So would you then now, instead of charging, let's say £400 a month, you now start to charge, let's say, I don't know, £380 a month. So you're taking a deduction in your rent, so you can't increase the rent and also exclude the electricity, because you may then be pricing yourself out of market. So this is where a bit of market comparison work will come into play. So you need to check what your competitors are doing. Are they still doing all-inclusive? And if they are doing all-inclusive, believe it or not, with the energy hikes that are coming into play, that could hurt them quite a lot. And more and more landlords are going to be offering exclusive models. You see and you hear about a lot of student landlords that have been running the all-inclusive model for the last 20 or 30 years. They're now removing themselves from the inclusive model to the fully exclusive model. Let's face it, students are council tax exempt, so therefore they don't need to pay a council tax. Now, when I was a student, we had to collectively pay our own bills. So between us in the house, we had to pay the electricity, gas, we had to pay the broadband. I don't think broadband existed back then, but anyway, show my age. But we had to pay the bills. And there are lots of services out there. I know there's a service called Split the Bill. And what you tend to do is that you give that company the name of all the tenants or all the students, and then they allocate the bill accordingly so that you're no longer responsible for that. So there are services out there. It's now the time to do the research, because if you don't do the research, it's going to cost you dearly over the next few months. Now, when it comes to gas, it's going to be an interesting one, because you can't really split the gas as you would have with the electricity. It's a lot harder because obviously with gas, now some of you may be thinking, well, Arsh, okay, you're splitting off the meters. I understand that. So electricity is split. What's going to happen with the gas within the property? So I'm just about to do a mini project on a 9-bed property in Manchester. And when I'm looking at this now, I'm already doing it with making it future-proof. So when I'm talking about future-proof, 20 years ago when I started in property, I actually had all my HMOs metered. So I'm not really too worried right now about the impact of the energy price increase because all my HMOs are pretty much all fully exclusive. Now, previously, landlords have been saying, Arsh, you're too expensive, or, you're pricing yourself out of the market. Guess what, guys? I appreciate that we're 20 years down the line, but the reality is that all the work that I did 20 years ago is now coming to pay me handsomely for it now, because all my tenants are now having to pay the full exclusive model, and all the other landlords are going to have to catch up accordingly if they want to remain in the game, because the energy price increases are going to be the difference between a HMO making money and a HMO losing money. So we really have to be conscious of our outgoings now. So understanding what's our energy bills doing, what they're doing, how's it being spent. Lots of people have talked about, can we put a fair usage scheme into the contract? And the reality is, and having looked at it from a legal standpoint, it's not worth the paper it's written on. So when we talk about fair usage scheme, you say to your tenants that you can spend up to, let's say, £300 of electricity and gas that month, but anything over, the tenants are then going to have to be responsible for. The reality is that that will never be collected, and I don't even think legally it's enforceable. So you've got to start thinking about a longer term measure. Let's have a look at what other solutions there are. Now, remember these things that came out quite a few years ago and everyone kind of laughed at them because of the ugliest looking things that you can put on your roof? They go to the name of a solar panel. Guess what, guys? These are now going to be huge business. Now, I'm going to say that if you have got a solar panel on your roof, first of all, well done for being forward thinking. Not many people thought that these may be the savior of your portfolio. I've got to say I've not, but I was at a charity dinner on the weekend, and one of the people that I sat next to actually is the provider of solar panels, and he said ever since people have been talking about these energy price increases, etc., he goes, their inquiries have literally gone through the roof, excuse the pun. Now, lots of people are talking about renewable energies. Lots of people are talking about solar panels so that they can start to almost now, instead of charging it back to the grid and getting a discount, they're now going to be charging back up some batteries, and they're acting as a backup so that in the winter months, you won't be using energy from the grid, but you'll be using energy from the batteries. Now, there are talks about grants going in place. So, like previously, we've had grants for external wall insulation. We've had grants for cavity wall insulation. We've had grants for upgrade of boilers, upgrade of LED systems, etc. There are talks that there are going to be some grants for solar systems. If there are some, the one thing I will say is that you need to jump on that, because if you can save money by recharging it back into the building where it's not going to cost you anything, it would be a massive benefit. The only other thing that I'd say on that is that you need to check with the consent of the lender that they're going to allow a solar panel onto the roof. Previously, some lenders didn't like the thought of it and they weren't allowing it. Previously, some of the solar panel companies were trying to lease the roof space off landlords. And again, that had an issue and an implication on mortgage terms and conditions. So you have to look at it from all points of view. Don't go into it lightly. And also remember that when you come to sell the property, solar panels, generally, if you're selling it back as a family home, they may not have been desirable in the past, but if the energy rate increases, continue to increase, I can imagine that more and more properties are going to have solar panels on them. So they will become the norm. So there we have it, guys. Hopefully just a few little tips there in terms of what I think is going to happen with HMOs in the future. One thing I will say is that we're seeing more and more landlords actually sell up and exit the market. And whether this be the actual agenda of the government, or whether they want more stock back into the housing market for people to actually purchase properties, we don't know. We're seeing lots of changes in the world right now where we're going to almost like a cashless society. Again, that's a completely different topic. I'm not the most, shall we say, clued up on stuff like that, but I've got kind of my own view on it, which I'll keep for another day. But landlords, some property investors, especially the elder generation, are now seeing this as almost like a push too far. They're thinking, well, we've made our money, we've done well in property, we've had some good times. Now, all this additional red tape that is coming into play is now pushed too far, and they're coming out to the market. And we're seeing more and more investment style properties being sold, HMOs, blocks of apartments, investment properties. And so we're going to see more of that over the next couple of years. It's a time to really buckle our belts, but more importantly, it's a time where we're going to have to pay real attention to our spreadsheets, real attention to the almost like the finer details to see what's making money, what's not making money, and what we can do to improve that situation. If you want to connect with me on social media, you can find me on Facebook, LinkedIn, Instagram, Twitter, TikTok and Clubhouse, all under the handle of Arsh. This is actually sponsored by the Property Investor app, which is the UK's first property investment platform, which showcases all kinds of deals all over the UK. Whether you're looking for that below market value deal, that rent to rent deal, that lease option deal, we've got them all there. Why not go and check us out? There are two ways to get involved. You can either go to a website, which is propertyinvestораpp.co.uk, or if you've got a smartphone, go to the App Store, type in Property Investor and download it from there. So hopefully you've enjoyed that. As always, guys, I wish you to be safe, well and happy, and be very cautious through this period. Take care and bye-bye.